Good morning and welcome to Business 360. My name is Blyden Ken. In Business 360 today, we'll be looking at the key features in the world of business. We'll look at the stock market and the features around and details regarding U.S. debt ceiling, what the 14th Amendment has to do with it. Today, U.S. President Joe Biden resumed negotiations over the nation's debt with House Speaker Kevin McCarthy and other top congressional leaders. There are dire politicians failed to reach an agreement the U.S. could default on its debts. Also known as debt limits, this is a law that limits the total amount of money the government can borrow to pay its bills. This includes funds. The U.S. Congress often votes to raise or suspend the ceiling so it can borrow more. The cap currently stands at roughly $31.4 trillion. However, that limit was breached in January, but the Treasury Department used extraordinary. Looking at concerns around the U.S., but beyond that, let's move to the Nigerian business outlook. The Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, on Monday cautioned 36 state governors on excessive borrowing. Okonjo-Iweala on that state's internally generated revenue IGR and ensure transparency in the management of resources. She said the Nigerian gross debt level has climbed from 19.3 trillion naira in 2015 to 91.6 trillion naira in 2023. The debt looks so alarming as revenues decline. The burden of debt servicing has increased dramatically, Okonjo-Iweala said. Still on Nigeria. The Nigerian Midstream and Downstream Petroleum Regulatory Authority has called on industry operators, particularly large consumers of petroleum products, to consider moving from the use of diesel to gas, in line with the federal government's designation of gas as Nigeria's transition from fuel after the petroleum stakeholders' engagement on gas utilization in Nigeria held at the Bristol Palace Hotel in Kano on Monday. Ahmed, who was represented by the Executive Director, Distribution Systems, Storage and Retailing Infrastructure, Obugu Fuel. Nigeria is creating the demand to move from petrol to gas. Regarding airfare, it's applied to international flight tickets in Nigeria. The IATA stated that it is incorrect to describe the exchange rate applied to international flight tickets sold in Nigeria as the IATA exchange rate. According to IATA, airfares for international flights from Nigeria are denominated in US dollars and converted into Naira, the local currency for sale in the Nigerian market. IATA simply applies the spot rate at which the Central Bank of Nigeria sells US. It was reported that the exchange rate for international air tickets in Nigeria rose by 37.5%, above the official rate of 461.1 naira to $1 to 634 naira. The Air International Organization are saying, don't call the exchange rate our exchange rate. We're not the one making the exchange rates. It's the Central Bank of Nigeria. It would be a good time to move to global economy to look at what the economic indices are around the world, beginning with economic calendar. The express shown some ups and downs. But beginning with 1:30 a.m. in the morning, the Westpac Consumer Confidence Index in Australia, it came out at 79 index level. Previous standing was 85.8. Well, let's talk about the 7 a.m. in the morning, the unemployment rates in Great Britain, 8%. Still in Great Britain at 7 a.m. in the morning, Clement count change for April stood at 46.7 thousand. While previous standing expected that the inflation rate year-on-year for April in Canada would be out. Previous standing for inflation in Canada was 4.3%, but the forecast stating is at 3.9%. By 1:30, we'll get to find out what inflation in Canada would be year on year. By 1.6%, the forecast has indicated an improvement to 0.7%, but by 1:30, investors and many analysts will get to find out what the data would be. Monetary policy trends between central banks around the globe are rapidly diverging. The Fed is ready to pause its rate hike cycle, just as the ECB, which is the European Central Bank, is hitting the accelerator. Meanwhile, the Bank of Japan is steering from a decade of zero rates. Is this a recipe for extreme FX volatility? That's the question in the market. But we'll get our answers as we find out from Blue Putnam, Chief Economist of the CME Group. Let's hear from Blue.
As we move into the second half of 2023, central banks are more dispersed in their policy paths than in a very long time. Inflation. The Fed has guided that it's prepared to pause. The European Central Bank is headed for a 4% handle on its rates, but it's not ready to pause, given that core inflation remains elevated well above short-term rates. The Bank of Japan remains the most accommodated of the big three central banks, not yet budging from essentially zero rates, even as inflation pressure is still rising. This exceptional degree of dispersion of policy paths highlights the volatility potential in FX markets.
That was the ideals from Blue Putnam. Let's move to Asia. China's industrial output growth was below forecast. China's industrial production rose by 5.6% year-on-year in April 2023, missing industrial output and the steepest pace since last September, boosted by manufacturing and mining sector. From the chart, industrial production in China has seen its ups and downs as of July 2022, production level in the industry in China was at 3.8%, went further upward to 6.3%, as at October had dropped slightly to 5%, and similar story by January 2023 had dropped to 2.4%, though beginning to rise again, and by April has gone up to 5.6%. Looking at African perspective, Angola inflation rate lowest since 2015. The annual inflation rate in Angola fell to 10.6%. Fund IMF, inflation measures how much more expensive a set of goods and services has become over a certain period, usually a year. On a monthly basis, consumer prices went up 0.9%, the same as in March. Let's have a look at the charts indicating Angola's inflation rates. The chart. Angola's inflation rate has shown decline in the rate, indicating positivity in the economy of the country. From a peak of 24.42%, it dropped to 22.96%, and in July 2022, 21.4%, and further going downward to 16.68% in October 2022, as at January 2023, inflation rate had dropped to 12.55% and even further to 10.59% in April 2023. Of that country. Let's look at Botswana. Botswana's inflation rate at 23-month low. The annual inflation rate in Botswana eased to 7.9% in April 2023, from 9.9% hike in the previous month. This was the lowest reading since May 2021, as food at a softer pace for transportation, housing and utilities and education. Meanwhile, inflation was steady for furniture and household equipment, while costs accelerated slightly in April after a 1% increase in the previous month. Good time to look at the charts to see what inflation in the country Botswana has been like. The charts. Inflation in Botswana has had its fair shares of going up, but it peaked at 14.6%, as at August. In July it was 14.3%, but it began to ease and dropped slowly to 13.1%, and afterwards 9.3% in January 2023. Also, it went to 7.9% in April this year, and the struggle has been in and out the scene. But it's been a remarkable improvement in the country, Botswana. Still talking about inflation, let's look at Nigeria's case. A nearly 18-year high and following 22.04% in the prior month. Meanwhile, food inflation, which accounts for the bulk, owing to increases in prices of oil and fat, bread and cereal, fish, potatoes, yam and other tubers, fruits, meat, vegetable and spirits. Let's look at the charts indicating Nigeria's inflation as it has been on the high on a steady basis against the trend in Africa. As of July 2022, inflation rate in Nigeria was at 19.64%. It went further upward and now 22.22% in April, indicating high. Beginning with economics perspective, 5 reasons why oil volatility remains elevated. Several facts standing by to give us ideals regarding this. Blue Punap is the chief economist of the CME Group. Let's hear from Blue Punap.
Per barrel. That was when OPEC Plus announced production cuts. Thereafter, oil fell back, and by early May, oil had dropped below $70 per barrel. Several factors explain why the announced production cuts from OPEC have not worked to sustain a higher price for oil. First, Russia is still at very steep discounts to prevailing world prices. The availability of inexpensive Russian oil has helped China the price of oil. China also has large buffer stocks of many commodities, so faster growth in China tends to lead increases in demand for oil, lagged effects of the recent banking turmoil, and the Federal Reserve's push to get short-term interest rates to 5% from near zero at the beginning of 2022. Soon, if the U.S. accelerates refilling its strategic petroleum reserve. But for now, considerable uncertainty over the future of oil price prevails, given the economic
deals regarding the energy market. Let's move to the energy market to see what the ideals are this morning. In the market itself, WTI crude is at $71 per barrel this morning, gaining 0.2 points, a 0.38% appreciation. These are slightly downward, a little here, a little there. Let's look at the metal market, what the indices with the metals are. For gold prices $2,000 per ounce, dropping by 0.21 points. Copper also slightly dropping this morning, but steel has gained 13 points upward this morning. Is what the indices are for the agricultural market. Soybeans is down 3.98% drop. For palm oil, the price is 3,472 Malaysian ringgit. And that is it on the commodities market, looking at the price of other commodities like rice, canola, cocoa. The FX market would begin with Todd Colvin giving us analysis regarding the pound. The British pound rallies back above the 1.25 level after last week's 2-day sell-off. Let's hear from Todd Colvin.
80 in the pound, only to see it reverse all the way down to 124.35 on Friday. Well, that was also today's low in the pound, but we did see it bounce higher back above 125. Some pretty weak data in the U.S. as well, above 125. Now, what does this mean for volatility? Well, if you check out that CVOL index over at CMEgroup.com, you'll notice volatility has been moving steady, but nudging higher ever so slightly.
Regarding the euro against the US dollar and other majors like the pounds. Let's move to the market and see the indices in the market this morning. What the changes are there volatility in the morning market. The market this morning has shown decline for the euro against the US dollar, dropping away from the 1.09 mark, but it's gained slightly this morning from yesterday's market. For the pounds against the US dollar, it's dropped. The US dollar against the naira, 460 naira equaling $1 US. For the euro against the naira, 502 naira equaling €1. The euro is gaining a whopping 3.39 points, a 0.68% gain against the naira. The pound also gaining up to 4.6 points against the naira. 7 just like yesterday, no changes. Naira to $1. So the naira, 930 naira equaling £1, and 916 naira to £1 at the selling rate. Euro to naira, it's on digital currency, Bitcoin, and the rest. It's been a decline in the crypto market this morning. For Bitcoin, it's dropped 151 points, 27,200 US dollar equaling 1 Bitcoin. Ether, similar story, 1,821 US dollar equaling 1 Ether. Well, no reasonable gain for Cardano and Solana, but Ripple's also slightly downward, just as Binance this morning. 25 index jumped 0.8% to 18-month high, above 29,800, while the broader Topix index gained 0.4% to reach over 10. Let's quickly look at the stock market in Japan, what the indices are this morning, based on global analysis. So dropping as early as possible, a negative 9.5 points this morning. Sony also dropping by 55 points this morning. Mitsubishi not really dropping, no significant difference in the market for it. Year on year, it's gained 25.95%. Financial and the rest of them, the fast retailing also gaining massive 321 points. The Nigerian stock market would be next, where we get to talk about the indices in the Nigerian stock market, showing what the market has been doing in recent times. Let's move to the Nigerian stock market, and 31.29 points were the all-share index in the market amid the struggles that came in the market. Well, the data, according to volume, showed decline of 56%. The Nigerian stock market, at the close of yesterday, stood at 28.4 trillion naira, giving indications from different angles. But the top gainer was Owando at 6 naira 10 kobo per share closure of the market, closing at a negative 9.66%, while the top volume was Transcorp, who had a massive 191 million in shares. This is where we draw the curtain in today's edition of Business 360. My name is Bladen Kim. Thank you.